Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. John, welcome back to the show. What's coming up today?
Jim, we're going to talk about Liontown, Albemarle, and Gina Rinehart's gambit that she played last week, and which we talked about a fair bit last week. Plus, I'm going to update on Solitario Resources permitting efforts with its Golden Crest project in South Dakota, as well as talk about another company the CEO, Chris Harrell, is involved with, Adamera, which also has had permitting issues with the U.S. Forest Service.
After Albemarle withdrew its $6.6 billion bid for Liontown on Monday, the company undertook an equity financing at a 36% discount to last week's closing price, which caused Gina Rinehart to take a $400 million bath on her 19.9% stake. Was that part of the plan?
I am not sure that Gina Rinehart quite anticipated that after she effectively blocked Albemarle from going through with its 6.6 billion Australian deal at $3 a share, that during the halt, the company would turn around and do an equity financing at a 36% discount to the $2.79 closing price from last week, where the market was already starting to worry that this deal may not happen. And that's since Gina Rinehart has bought most of her position since April of this year, when Albemarle first was outed as being interested in making a bid for Liontown, and then finally got an accepted agreement with Liontown in early September. Then she really came out and stepped up her purchases, which last week she reported hit the 19.9% threshold with about 438 million shares. And that threshold is important because this deal that Albemarle was going to do with Liontown, once due diligence was done and the non-binding offer became binding, it required a shareholder vote. And 75% of the shares would have to be voted yes. And if Gina was going to vote no, that means about 1.3 million additional shares would need to be cast, all with a yes. And of course, they're not all going to be yes. There's going to be some additional no's joining Gina. And so that means even more need to be cast. But with 2.2 billion shares issued, this became a logistical impossibility. There was no way that management would be able to round up enough yes votes in time for the meeting. So what probably happened last week was that the Albemarle sat down with Gina and said, what do we need to do to get you to vote your shares in favor? And since her buying has been very close to that $3 price of the offer, obviously there's two paths that she could have taken. She could have had two goals. One was to grind a 10 to 20% short-term profit out of Albemarle, maybe get the deal increased to 330 to 360, and then collect a cool short-term profit. But since Albemarle had already come out and said this is a final offer, and we will do it if it passes the due diligence, the risk was that they would not be able to increase the offer on something that is clearly an extortion effort, and it would lose market credibility. And so they came out and on Monday said, we are withdrawing from this bid. They did not say that they had found anything wrong, but they cited the growing complexity of the deal. And that was clearly a reference to the fact that Hancock was in a position to block the vote, make it a big waste of time and money. And so they, citing capital allocation discipline and all that sort of stuff, walked away. And so what was Gina's goal? This was a risk that was clearly there. The other goal that I talked about last week is that Hancock, which has about $18 billion cash, it's a major iron mining company, and it has about 180 of these subsidiaries involved in all kinds of other business. And in fact, when Gina went on this stake building exercise, 180 of them all managed to buy shares, but because they're all under one ownership, they're all sort of collective. It's basically her that built up this 19.9% stake. My speculation is that she sees the future of lithium as $100 to $200 billion market, with Australia a major player, other parts perhaps like Brazil and Canada also playing important roles. And she sees this as a hard rock mining diversification of the existing iron ore mining operations that she already has. And Liontown's Kathleen Valley project really is the only advanced major pegmatite lithium deposit in Australia that will be in production within a year, that is not yet owned by another producing company. So this could be her stepping stone. So did she expect such a deep discount that raised $365 million at $1.80 and possibly another $45 million being made to the non-institutions, the ordinary shareholders who can each buy, if they're eligible, meaning like they don't live in the United States, that they can buy up to $30,000 at $1.80, which is another 25 million shares. What she can do at this point is sit back, watch this company get financed, and just wait. So she took a $400 million bath on paper, but she blocked Albemarle from gaining control of this last major asset. And with nothing really happening over the next year except maybe responding to changes in the lithium price. The market likes to track the trend of the lithium price. We don't know what that's going to do. It's very, very volatile right now. She's in a position where when people get tired of waiting for not something to happen that doesn't happen, she may make her own all-cash offer. So now the question becomes one of who will eventually own Liontown. Can Albemarle come back with a hostile bid that doesn't require a shareholder vote, but might that require the Foreign Investment Review Board to weigh in if that is not an approved bid by the management? Of course, Hancock is an Australian company, so is not likely to come under any sort of negative ruling that it can't buy out Liontown 100%. But she doesn't have to pay more than $3. If market circumstances allow, she may end up paying something between $2 and $3. So what she really did with her very expensive $400 million bath was put herself on the throne. This is in essence a queen's gambit where she has made a modest sacrifice that's going to be temporary, which puts her in a position down the road to control Kathleen Valley and turn it into the stepping stone for her move into the lithium mining business. And the financing that they did also included a $750 million debt facility, which part of it replaces the existing debt facility they have. So the company is now pretty much financed to pay for everything for production to be ready to begin in the third quarter of next year. Almost all of the production has been signed off with offtake agreements to Tesla, Ford, and LG Energy. It is in the form of spodumene concentrates. Albemarle does have the Kemerton lithium hydroxide facility that it owns 100% and is undergoing an expansion. Even though these three battery-related entities are going to take spodumene concentrate, if the producer from Kathleen Valley could process them into lithium hydroxide, they would probably do a deal to, we don't need to send this concentrate to China and have all the headaches that are there. We would do this. So Albemarle still has this problem of it has this processing capacity in Australia and may come back into the picture. However, Liontown itself is negotiating with Sumitomo on building their own lithium hydroxide facility to handle their own spodumene concentrates and make the battery customers happy. Now, this is only for the first year of production, and Kathleen Valley has expansion potential down the road. So it is a very, very strong core asset. What does it mean for the other places like James Bay? Well, the liquidity event that we had been looking for, well, it's not going to happen right now. And along with Gina taking a $400 million paper bath, the shareholders who did not sell into her bid, they've also taken a 1/3 haircut in the price of the stock. What will it do in the meantime? I don't know. It's kind of a situation similar to Patriot Battery Metals. It got its $109 million financing from Albemarle at $15.25, but now it's $10 to $11 a share, and not trading a super lot. It's not a big liquidity event. It's a very similar, like trading 2/3 of a recent peak valuation, and it's part of this slump we're in right now with the whole lithium sector and lithium carbonate prices just barely bouncing off their recent low close to $10 a pound, and a lot of bad news coming out of China about the slowdown of the purchases of its own EVs that it's now trying to dump into the rest of the world, and starting to introduce export controls on materials like graphite in an attempt to prevent Western companies from getting the raw materials cheap so that they can build their own electric vehicles that they want to sell in their own countries, and put blockades against the import of Chinese electric vehicles. This is all a big mess right now that's unfolding. But if you look fast forward and look in the longer term, the whole lithium sector is going strong and will continue to get stronger. With everything that's happening in the Middle East, it's hard to imagine that oil prices are going to go back to $40 rather than to $120 on the upside or worse.
Any permitting breakthrough yet for Solitario Resources?
Well, when we last talked about Solitario Resources, we were hoping, or at least Chris Harold, the CEO, was hoping that by the third week of August, the U.S. Forest Service would have come up with a finding of no significant impact. And this plan of operations application was submitted in February of 2022, got delayed earlier this year because there was another problem in the southeastern part of the Black Hills region when somebody tried to get a permit near a reservoir where everybody from Rapid City has their cottages, and that ended up distracting the U.S. Forest Service, and they ended up creating a moratorium around that area, and then went back to work on the other permit applications that were underway. And the reason sort of third week of August was important was that there's still a 2-month period after the U.S. Forest Service makes its finding where it's open to a public comment period, and it's not the company's job to respond to the comments. It's actually the U.S. Forest Service's job to defend itself against the criticisms people may have about the decision. The company has paid for all these different studies and stuff that needs to be done as part of the finding of no significant impact, and this did not happen by late August, and that pretty much killed the possibility of a drill program before December, when snow makes this area pretty messy. So right now, we're still hoping that they can now drill in May of next year, which means somewhere between now and February, we hope to see this finding of no significant impact issued by the U.S. Forest Service. And then the 2-month comment period go by where the Forest Service successfully defends its decision, and Solitario can begin a drill program at Golden Crest to start figuring out the third dimension of this incredibly existing gold system that nobody had any clue was present on the western side of the Black Hills. Almost no evidence of prospecting in the past 130 years when all the activity was on the eastern half of the Black Hills. This is what the last major gold exploration frontier in the United States, which isn't buried under barren cover rock or gravel or something like that. And we're waiting for this to happen. And it does have an audience. So this week, the company announced that they had raised 4.7 million US single shares, no warrants, at 55 cents, 8.6 million shares. Back in August, they had done a 4.2 million share financing at 60 cents US with Newmont that got it up to just short of 10%. So the big groups are watching this carefully. And it turns out that this party that came in, 80% of this new financing was a Canadian institution, not your usual Bay Street type of institution that's here today, gone tomorrow, chasing whatever the flavor of the month is. No, this is a group that's quite serious, and they actually spent a couple months doing due diligence and preparing to make this decision to put up this money. Yes, it dilutes at a price that is probably even a discount to what the Florida Canyon 30% carried interest is worth, which they have in Peru with Nexa. But they now have about $9.5 million US working capital. If we have an awful next 6 months, this won't matter to Solitario at all, because it's got more than enough money to initiate drilling next May, assuming they get this permit and don't have to wait and miss another year of waiting for the U.S. Forest Service to approve the drill permit. So this is a very positive development. Solitario will most definitely be part of my 2024 favorites collection, though you can bottom fish for it now. It might get smacked down if we get a major market pullback later this year. But I do not, I do not think we will see too much downside on this stock. There's too many people watching it who are actually hoping that there's a train wreck in the market that brings stock out. This company is now positioned to do extremely well next year, with the caveat that maybe the U.S. Forest Service never gets around to issuing that plan of operations drill permit. Now, the opposite kind of problem is affecting Adamera Minerals, which we've talked about in the past as a bottom fish, part of my bottom fish collection. Adamera Minerals has the Buckhorn 2.0 project, which surrounds the old Buckhorn 1.0 crown jewel underground mining operation, where about 1.3 million ounces of high-grade gold was produced by Kinross. This was a deposit found by Mark Jones and Chris Harold's company, Crown Resources, back in the 80s. They tried to get it developed as an open pit. The regulators would have none of that, so they eventually initiated underground permitting. It attracted Kinross with what was pretty cheap bid at the time for what turned out to be an extremely profitable mine. That's now depleted, and Adamera got the opportunity to assemble all the surrounding ground that Kinross had dropped and walked away from, keeping only the area, the mining lease, where it has reclamation liabilities. And they've been applying with 3 different bodies, the state level, the BLM, and the U.S. Forest Service for drill permits. They managed to finally get a drill permit from the U.S. Forest Service in October last year, but the market has been so bad that the company has been unable to get a drill program going. And the problem is that this permit expires at the end of October. So the company's now scrambling to get a drill onto the property and poke some holes into a new target they call VTEM30, which is about 1.5 kilometers from the old Buckhorn mine. And what's interesting about this is last year they drilled several VTEM targets that they had reprocessed from the 2009 geophysical data that they had purchased from Kinross. And the 3 or 4 targets they drilled didn't come up with anything interesting. In fact, even worse, they did not come up with anything to explain the conductivity, such as sulfides or graphite. So they've been scratching their heads wondering if this geophysical data is of any value at all. In the case of this VTEM target, that's a somewhat faint one, not that far from the original mine, which was sort of a flat-lying deposit. They did an audio frequency magnetotelluric survey over top of it. And sure enough, it looms as a big conductor starting around 250 to 300 meter depth, validating the VTEM target. So the hope right now is that they can get a drill rig mobilized to the property, poke some holes into it with three possible outcomes. One, you get a discovery hole of a sulfide skarn with lots of gold in it. Two, you get simply an explanation such as graphite or sulfide, pyrrhotite or whatever without any precious metals in it. And that's going to be important because it validates the MT surveys as a tool to upgrade these VTEM anomalies, of which they have about 30 on that property. The third outcome, of course, is that it's also a nothing burger, in which case they'll be in a difficult spot to raise additional money. And they just announced a little desperado financing of 5 million units at 5 cents with a full warrant, $250,000 to pay for this program. This is like, end of almost a life cycle situation for Junior. It's got several key holes that will try to get down before the permit runs out. Then, of course, they're going to have to take a break for winter anyways, so they hope that in 3 months or so they'll have another permit, the permit renewed for another year if they have a discovery hole, so that they can go back in there in the sort of late second quarter, April or May, and resume drilling if they have a discovery. But this is a case, too, where the U.S. Forest Service took forever to go through all its findings of no significant impact. By the time the permit got granted, we were in a horrific bear market, and the company had drilled targets on the BLM land that didn't have anything, and it was a 2-3 cent stock limping along with a treasury, just barely enough money to keep the lights on. Maybe something like this becomes that sort of miracle hole that delivers a discovery, and even if it isn't the miracle hole, but validates the MT survey as a tool to upgrade the VTEM targets, they will have a second life, though probably the warning here is they may have to do a rollback along the way to tighten the share structure.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.